There's a lot of people that believe if you invest in real estate that your money is going to get burned. And let me just tell you right now, there are 5 other myths that aren't true about real estate either, and I'm gonna expose every one of them. If 90% of all millionaires make their money in real estate, then why are people so terrified of it? We don't have enough millionaires in this country because they're not smart enough to invest in this little guy. I want you to think about it. At some point, you're probably gonna buy a house for your family, right? Is it that scary? Well, kind of, because you have to make the mortgage payment to make the deal work. So doesn't it seem even more scary that you'd buy a house that you don't live in? I don't know, you get to outsource someone else to pay the thing off. If it's gonna make you potentially millions of dollars, don't you think it would be worth understanding the myths that keep people out of the game? And what if all of the top 5 myths were actually wrong? Let's investigate them right now. Financially, there are like 3 types of people. There are those that are just reckless with their money, they're impulsive, they can't save 2 pennies for the life of them because they just spend uncontrollably. But if you're one of the accumulators, you're either a stock market dude or you're a real estate person. And guess which one there are more of? Stock market people, meaning 401ks and IRAs, because we get lulled into this notion of, hey, I'm going to have my company match every dollar I put into my 401k. It's like free money. How could this be bad? And I'm like, I don't know. You have no discretionary money left over for investing. And as a result, you're only averaging single-digit ROIs over 30 years. Hence, the average person between 401ks and IRAs for retirement has $209,000. You can't retire on that. That'll last you a couple years, because did you know that by 54, you're going to peak out on your expenses of life? You're going to be spending about $94,000 a year. So a couple $100,000 is basically 2 years. This is why people can't retire. But there's this third category, and this is for people that invest in real estate. Guys like me that started with 25 homes, starting from nothing, and 25 homes meant $12,000 of residual income every month without needing to work. And what did I do? I turned it into 50 homes, 100 homes, 1,000 homes, and I kept on going. So understand that when it comes to people actually building wealth, there's a reason why 90% of millionaires do it in the game of real estate, and yet the majority of people, the stock market people and the impulsive people, they don't participate, and it's because of these 5 major myths that keep them out of the game. All right, myth number 1, you should only invest in real estate in your backyard. False. While many people only invest in their backyard, there are a total of 324 real estate markets nationwide across the country, and statistically, the odds hold true that where you live is likely not going to be one of the best opportunities. I, for example, only buy in 5 different markets. These are the top 5 markets. These are the markets where the most people move to, where you have actually the greatest population growth, migration, where jobs are moving. And what does that mean for real estate? It means that supply and demand is going to favor the game of real estate. And why does my real estate appreciate more than your backyard? It's because I'm in the markets that do. So rule number 1, if you're going to become a successful real estate investor, don't limit yourself to where you live. I'm going to tell you right now that the second thing that keeps people from investing in the game of real estate is they have this belief that it takes money to make money. They're like, oh my gosh, real estate has gone up, Fed has hiked the interest rates, it costs so much money to get into that game, and I just don't have the money. And can I share with you a little secret? You have the money sitting in a 401k, an IRA, or even equity in a personal residence. And guess what? If that system is going to fail you, how you build wealth, according to J.B. Shea, French economist, is you move your money from pathetic low yields into more meaningful higher yields. While having capital certainly helps, there are creative strategies like seller financing or partnering with other investors that can help you break into real estate investing without a large upfront investment. I mean, I house hacked my way. It took me 14 months to save my first $5,000. I used $3,300 of that as a tiny 3% down payment on this baby little house 5 blocks from, university. We rented out the basement, covered my mortgage, and then guess what? A year later, I used the equity in that home to buy my second house. I used the equity in the second house to buy the third. And then something cool happened on my 4th house. My father-in-law all of a sudden became really interested in my first 3 homes. Like, I thought you were gonna fall on your face, but you didn't. What are you doing? And he saw my ROIs, my cash flow, the money I was making, the tax benefits. And he decided to partner with me. He said, dude, I'll come up with the money from my 401k and IRA, and you do all the work. Guess what? That's creative real estate. I didn't have to come up with the money, and I only got 50% of the profits, but now I can move at the speed of light. And I got news for you. If I lost everything all over again today and had to start all over, I could do the exact same thing again. How do I know that? Because every single day I buy property with no money. All right, here we go. Let's talk about the third myth. If I get into real estate, Kris, it's gonna take all this time. Like, it's probably a full-time job, and it's probably going to like wear me out. It's gonna tax me. It's gonna be this crazy burden, and I don't have time for that. Check it out. While horror stories of nightmare tenants abound, Bigger Pockets, one of the top real estate podcasts in the world, reports that the typical landlord spends an average of 4 hours per month on a rental property. This is a 1/40th of the time that you actually put into a full-time job. A different way of thinking about it is when I buy real estate, I hire a property manager to do all of the work. Or I'll use my lease option system where I'll sell or finance the property to a family that moves into the home. And guess what? There's a reason why with less than an hour a month, I can manage my entire portfolio. And at the end of this video, there's gonna be a link below where you can learn about partnering with me, where I can make it just as easy, turnkey, and hands-free for you. Myth number 4, real estate is risky. Like, you're gonna lose your shorts. Don't you know that there's real estate crashes every so many years, and then people lose their homes and they go foreclosure and bankrupt and everything? I was like, is that really the way the game works out? Because I'm gonna tell you right now, personal experience, 2008, when the market crashed, when the world crashed, when the stock market crashed, and the real estate crashed. What if I told you that I had a real estate strategy where I didn't go late on a single payment and I also didn't lose a single property, and instead 2009 and 10 went into markets like Vegas and Phoenix and bought thousands of homes, within 5 years made my partners and investors over $100 million. While any investment carries a certain amount of risk, if you purchased a home at any point in the last century and held it for a 7-year period before selling, your house would sell for more than its purchase price. Here's what that actually means. You buy a house, you rent it out, you're making money on it, the market crashes. When the market crashes and people lose real estate, guess what they do? They flood to the rental market. The rental market shoots up. You keep collecting your rents, you keep making more money, you keep making more cash flow, you keep getting more tax benefits, and eventually what happens? Supply and demand. What does it do to the prices? Shoots it back up. So the cycle can be manipulated 100% in your favor. And this is why people make millions of dollars in real estate. And I can tell you right now that you don't need a whole lot to buy one property. And if all you're doing is averaging a 25% average ROI, which is very easy to do, right? I've done it 6,500 times. Then that one property over 20 years can turn into $4.3 million. Now, is that enough to retire on? I'd say we're getting a nice start if all that is doing is really just starting with one property. You tell me, what's riskier? Investing in a broken system that is guaranteed not to work, or doing something like real estate the right way where you at least have a chance of success? And if you do it with me, a pretty good chance. All right, Kris Krohn, you have me nearly convinced. But what about this idea that the market is awful right now? It's not great right now. Well, I got news for you. Is the market really bad, or is this a myth? Let's break it down. Contrary to popular belief, right now is actually one of the best times to invest in homes. If the Fed lowers interest rates, the housing market will surge again. And if they don't, the market will continue to rise slowly. Good investors know that time in the market beats timing in the market. Real estate is a legacy play. And I'm going to tell you right now that there are people hurting on homes. They're going back to the banks. And what does that mean for investors that know what they're doing? We're getting really good deals. Well, what about the prices that have gone up? It has jacked up the rents. Yeah, but Kris, what if the market actually crashes? Well, there's a reason why my rule is to buy single family homes under the median. My average purchase price, under $250,000. That's 30% lower than what the national median is supposed to be. So there's a reason why over the last 20 years, I have a track record on thousands of these deals. And I have that track record published, and I want to share it with you. Because if you get it and look at it, I'm about to give you, in my opinion, the #1 strategy in all of real estate for set it and forget it, for passive investing, for doing a little thing here that in 20 years can creep up on you and make you a mega multimillionaire. I clearly believe in real estate investing. And the question is, do you, or are you willing to learn about it? Check it out. Right over here, I'm adding this 20,000 square foot addition in an economy like this with housing prices like this. Why would I do this?
Well, you're right. I've made my name in real estate. I've made my money there, but I'm making more today than I've ever made before. And if you're ready to become a millionaire for the first time, or maybe you want to do it again, but even easier and faster, click the link below. And I want you to learn about partnering with me. Look at my track record. Look at everything I'm doing, because if I was willing to do everything for you, what might change? Well, I can show you how I mitigate all the risks, how all those myths are bogus, have not been true for the last 20 years. And based on what's coming, you have the best real estate market in front of you. This is where the greatest fortunes will be made. And either you're going to do something about it or you're not. But if you want to do something about it, click the link below and let me show you what I'm up to.
Check it out. If you're a subscriber on my channel, it's because I want you to be rich. I want you to be abundant. I want you to have every opportunity in life. But society don't feel that way. Society wants you to be poor. And if you don't believe me, click this video right here and let me show you the problem that most people don't get and also what you can do about it.